Welcome. Welcome.
You're awake now?
Yes, more so than before.
After all the coffee?
Yeah. No, I don't drink coffee.
Oh, that's the reason probably.
Yeah, most likely.
You need to explain to the audience that he is
Okay.
changed, but we need to catch up. So we have the
Which is also a good thing because people are bored to listen to it.
I think my... Oh, okay.
It will be interesting to see.
Let's sit down. Ladies and gentlemen, I think it is my very, very tough duty to call the audience to order and say that me and my distinguished panel, we are now standing between you and your holidays or your weekend. So bear with us, and we will promise you to deliver something fantastic. You may have noticed that there are slight organizational changes on the panel. Pino Musolino, he had, sorry for the assumption, and sorry for these laughters. Pino Musolino, he has a plane to catch, not a catch to plane. I'm mixing up things, it's late in the day. And we replaced him by Hanneke Veringa, our dear friend from AXA, who will have a lot of things to say, and she will tell us what she will have to say. I want to lead into this panel by a short introduction, and I think some of it I already mentioned in one of my comments during my previous panel. There is a distinct feeling in the Western world that you have to push back a bit, that you can't just see and watch China step onto the ground and purchase all the assets the way the Japanese companies did in the 80s when their economies were roaring. Now, you may know or you may not know that Switzerland is a country where I once, traveling with our finance minister to a foreign country, had to explain to him, upon him being asked by the local media, what is the Swiss industrial policy? I had to explain to the Swiss finance minister, Switzerland does not have an industrial policy. Switzerland is proud not to have an industrial policy, because as soon as you have an industrial policy, you start to favor certain industries, and you start to kind of direct the industry. We are a country that is proud not to direct the industry. We are a country that is proud to let things happen. Now, Europe as such is not as free as not having an industrial policy at all, but they had a tendency to let things happen. Same to a certain extent in the US. Now, the US was the first country to start to push back. Whenever a large Chinese corporation wanted to buy a stake in something significant, the US started to check whether this is not a security concern, and always found out that it is, for some reason or the other. And large investments in the US were more or less foiled. So Chinese companies reverted to the Silicon Valley and started to engage heavily in private equity until recently that became more and more difficult. At that stage, Chinese companies started to oogle at Europe. And in Europe, they made numerous acquisitions, mainly initially in England. England was one of the focal countries, and then later on also on the mainland. And Switzerland, we heard, one of the most famous cases is the 43 billion acquisition of Syngenta, which is a significant acquisition, I would say, in particular in a country like Switzerland. So far it went down like butter, but in the aftermath we had some discussions, even in the country that claims we have no industrial policy. And there are politicians saying that we should change our private law and make things that I, as a lawyer, think are horrid, but there are discussions like that going on. The most realistic things that are pushing back against investment from Chinese companies are currently happening or have happened already in Germany. There is a review board in Germany that has, in fact, already turned down one acquisition, and there is a rule of law developing, let's say, at least in Germany, and that might become the model for other countries that starts to set in motion at least a review process. That doesn't mean that review process will be making everything impossible, but there is something happening, let's put it this way. And I think we will hear more about this, I hope, from Toni, Mr. Toni. And what I'm now trying to say, the panel or the discussion that we want to go into should focus somewhat around the question, is an industrial policy good? Do we need an industrial policy? And what role does politics play into these industrial policies? Is that a sign of the climate change that Sir Bolzano has seen happening? What does a nation have to, what dealings does Switzerland or Germany as a nation have to do with me as a private individual who wants to sell my private company? Why do I have to talk to the government if I want to do that? And what is my relationship with that? I think that's an interesting question. And then the interesting next issue is, does nationalism as such lead to a certain paranoia that to make any foreigner become a spy? Am I a spy in Holland? Are you a spy in Switzerland? Where does that lead to? Is this the right track? And are we on the right track? And these are my initial inputs into this discussion. And as in the last panel, I would like the panelists to sell themselves, introduce themselves, tell us who they are, and then give us their $100 worth of input into these topics. Thank you. And I give the word now to Marco Toni.
Thank you. Thank you, yours. Well, my fee as a lawyer is a little bit higher than $100. That would last maybe for 10 minutes or something like that.
Today everything is at discount.
It's good to be here at the University of Zurich. I studied actually here, but to be honest, I don't think that I ever attended a seminar or a class in Friday afternoon after 3 o'clock. So thank you all that you're still here. Much appreciated. I'm a corporate M&A lawyer working with Loyens and Loeff. I'm focusing on international inbound transactions into Switzerland, mostly representing foreign buyers. And of course, due to the fact of this panel, also to give you a little bit of background, what is my Chinese angle of the practice. Since 2013, I would say we have advised several Chinese clients buying companies and assets in Switzerland. We have seen a steady growth since 2013 on that side, which is, in contrary to other countries in Europe, still increasing in Switzerland. And hence, I will give you a little bit of background about the general developments, about the investment restrictions from a legal perspective. What does that mean? Where does it come from? And then try to give you also a little bit of an outlook, maybe at a later stage, on how negotiations are going on with Chinese counterparties when you actually represent Chinese clients and not the Swiss one. Well, as a general overview, I mean, looking at foreign investments into Europe, you have to decide, I would say, between greenfield operations and classic M&A transactions, whereas greenfield operations into Europe are the big part, the big chunk of the transaction that is going into Europe. On the other hand, the M&A transactions are the transactions that you can read in the newspapers and which are also the big ticket deals, like Urs mentioned, the ChemChina Syngenta deal, for example, in Switzerland, which made big news a couple of years ago. And that's also where I'm active in. Looking at maybe a couple of figures looking back, how is the trend? Foreign investments into Europe. Most successful year in that sense was in 2016. Since then, investments decreased, transaction sizes decreased into Europe. The last 5 semesters, we see a downturn in numbers of transactions and in value of transactions into Europe. I mentioned it quickly before. That is not true for Switzerland. Here, the numbers of transactions doubled actually this year, which is for us, of course, a very good sign as transactional lawyers. But where is this decrease coming from? Certainly it's, and you have discussed that as well, it's a trade war between the US and China. Everybody is unsure where that leads to. It is also the investment controls by Beijing, capital outflow controls, which are also from a transactional perspective always one of the first questions you have to ask, or you're being asked if you represent the Chinese clients. How secure is the fund flow? Do we have the commitment that the equity is then really in Europe, or do we need to get it from somewhere else? And there is an increased European scrutiny on deals, mainly because of fears like lack of losing control of important industries in the technology sector, dual-use goods, defense technology, that the European countries are afraid of losing this know-how to the Chinese on the one hand side, and the second point is not only that the know-how is going away, but also that Chinese buyers are taking over the European companies and try to push them out of the market. I think this is the fear that is currently ongoing in Europe. Nevertheless, compared to the US, Chinese investment in Europe is still on a very high level. I think it's 8 or 9 times higher than currently in the US. So we are still looking at that on a very high level in terms of foreign investments in Europe. Looking at the recent policy developments, we mentioned it a little bit before. There is an increased scrutiny in all the bigger countries in Europe. I want to quickly touch base on a number of countries. That is, first of all, Germany, France, UK, looking quick look then at Switzerland, and what is actually going on as well on the European level. So Germany was always had a policy of openness, really not a lot of restrictions when it came down to foreign investments. That changed in 2016 with the acquisition of KUKA, the robotic enterprise that was acquired by Midea. And increased scrutiny now we have also seen due to the investment in Daimler, a 9 billion investment in Daimler by the Chinese automaker Geely. That raised a concern that I mentioned a little bit before and led in the last couple of months to a couple of vetoes from the German government on certain transactions. So there was a potential acquisition of 50 Hertz or the Leifeld group, which was vetoed, so could not have happened. That is clearly an outflow of a new policy development in Germany, and they have just recently even lowered the standard for a review. It was until the end of last year at about 25% of a foreign investment. If you acquire a stake over 25% in a German entity, this was subject to scrutiny. Germany now lowered this threshold to 10%. So we expect a little bit more pressure there and scrutiny by the German government in that area. France. France is a country that knows investment restrictions already since a long time. They increased now as well new regulation to further cover the scope of other technologies or other highly critical areas. We have seen that in the past. It was not influenced actually by the Chinese buyers, but it was the Alstom GE deal that raised a lot of concern in France, and hence they also increased their scrutiny level. In the UK, again, like in Germany, a very open country for foreign investments. We have seen since the acquisition of a nuclear power plant by a Chinese company that also there new regulation should be put in place, which will also give the UK government the chance to review any transaction independent of a threshold or a size to review and also then to veto. On the other hand, like Urs said, we are here in Switzerland, we are not afraid of Chinese investments. We don't like the regulations too much, so we have not yet implemented any stricter foreign investment regulations in Switzerland. However, what you can see in the press is also the issue coming up with reciprocity. Why is it that a Chinese company can acquire 100% of a Swiss entity, whereas a Swiss company is not allowed to do so in China? We are taking it from this angle, and this will increase still certain comments in the newspapers. However, as I said before, we had a couple of transactions in 2018. The size actually doubled, and I think that is something, this trend will continue as well. Maybe my last point now is on the EU level. Also here, the EU has found, is at the final stages of finding an agreement and a resolution on foreign direct investments on critical infrastructure and technology. They will set out new guidelines for all the national states when they want to implement certain regulation. Also here, regulations will increase, and we will see more scrutiny by the European government on that level.
Thank you, Toni. Let's give him a hand.
On the case? Yeah, right. No, I was. It's not related. Maybe I'm coming back to this topic at a later stage. I was asked to just to give you a couple of bullet points, but I remained now with the first one.
Maybe one point that I want you to dwell on, if you know anything, because it's sometimes difficult to get clear answers. Have you had clients, or did you? Have you advised clients that had difficulties investing in China? Did you have concrete cases, or do you see some of the difficulties?
Yes, it's a good question. It's always, it's not easy to set up. As you know, you can invest in China only by a joint venture company, in principle, with a minority stake up to 49%. The entire setup of the joint venture structure is not something that you have set up within 2 or 3 months. What is the usual time frame when you look at Western investments? It takes much more time. It takes, you need to know the government as well. You need to have the relationships there. So what we're usually doing is we are covering our European client into China until more or less the border, and then work together with a local Chinese firm to actually bring them up to speed.
Thank you, Marco. And sorry that I always call you Toni, but it'll happen again.
You're not the first one.
Okay, thank you. With this, I want to lead over to Hanneke. And I'm tempted to know, of course, what you have to say, because I noticed in the morning that you have strong opinions, and strong opinions count. Floor is yours.
Yeah. So my name is Hanneke Veringa. I'm the country manager of AXA Investment Managers in the Netherlands. In that position, we are responsible for something between 20 and 25 billion of assets under management that we manage for our clients. Next to that, I chair within AXA Investment Managers everything that has to do with investing in China. I chair as well everything that has to do with responsible investments, and I actually advise the Dutch government on developing an industrial policy in respect of institutional investors for investing in China as well. So it all comes nicely together, because what we are actually trying to convey to the Dutch government and to institutional investors is that in the Dutch market we have 1.6 trillion of assets under management, and with that pool of assets we're actually number 6 in the world in terms of pension funds to be invested, and that is a leverage that we can use vis-a-vis China, in a sense of that we represent a ton of money, and it's actually relatively concentrated with a few very large pension funds. So if you would have to have a conversation with many different pension funds, it's quite complicated. But we can have a conversation with just a few, and then actually combine it with the interests of AXA as well. And the interests of AXA as an insurance company are a little bit aligned with the Dutch investors because we're both focused on climate change. And if you look at China and you compare the CO2 footprint of China with the one of the US and Europe, then the footprint of China is actually bigger than the one of the US and Europe combined. So right now there's a lot to do about climate change in the press, in the Dutch community. So students are actually in the Dutch community taking off from school and doing demonstrations. And I don't want to say that I view this as hair coming, of grass coming in a large audience or in the press, but I'm happy to state here that I think that it's a lot of fuss about nothing, because if you really want to do something about climate change, you have to address it in China. And one of the ways that we can address it in China is to just represent large institutional investors who want to do something about climate change. So as an asset manager, the most important thing that we are doing as an asset manager is that we make sure that when we allocate capital, that it's fit for purpose. So if I invest on behalf of a client, I need to make totally sure that I'm allocating the capital on the basis of the right data. Because it's a reputation risk for me if I have to go back to the client later on and state, well, actually, sorry, my data was wrong. And it's actually an even more important risk for the insurance company or the pension fund who has communicated to their stakeholders that they were doing something about climate or water, and it turned out to be the case that the data that we were using was wrong. So getting the data right is the most important thing in my sector. And in respect of getting the data right, getting the impact data right, there's a conversation that we want to develop with China, with the government, with the stock exchange, with the companies, and it's all going to be focused at we need to get the data right. And to give you an example, the Chinese companies are getting into the indices, into the bond index, into the equity index, and the rules for getting into the index are just based on, is it tradable, can I settle it, is there a derivative? It's technical. If you want to have impact in China and you look at the equity that is getting into the index, into, for instance, the emerging market equity index, only 10 of the 250 companies that arrived in the index have subscribed to Global Compact. And the 10 companies that have subscribed to Global Compact are largely in the petrochemical industry. So it's kind of odd that those companies are aware of it and are subscribing to Global Compact. If you look at green bonds in China, in terms of who sets the standards, China is right now the biggest market for green bonds. And if you go to internet, you'll find everywhere a ton of super interesting articles about the size of the Chinese green bond market. But their definition of a green bond is materially different from the definition that we use here in, let's say, America or Europe. Because the green coal is in China still green. Green coal is not green in Europe or the Americas. So the definition for a green bond here is very different from the Chinese definition. And if you look at, then the other thing is Sustainalytics. Sustainalytics is an organization that sort of ranks companies in terms of ESG. And some of us may be cynical and are like, ESG, why? I mean, we know that stuff is wrong in China, why even bother? I think that as an institutional investor, when you have leverage and when you represent 1.6 trillion in the Dutch market, you can actually use that leverage to have a conversation about ESG in China. And so the trend in the rest of the world is that the larger the company, the better they score on ESG. It's like almost noblesse oblige, in the sense that you run a big reputation risk if you get into the newspaper and something is wrong with your ESG score. But look at Facebook. In China, the scores are all over the place. So Sustainalytics have looked at Chinese companies, and there's really no relation between the size of the company and the ESG score. So this tells me that there's a case for an industrial policy focused for my story on how do we allocate money, to have a conversation with the Chinese about what the standards are for green bonds, how important it is to subscribe to Global Compact, and how they report data, not only the financial data, but also the impact data. And so there is a framework defined by IFC together with Harvard. It's called the Economic Framework. And if Chinese companies would adopt this framework, I'm pretty sure that large institutional investors in the Netherlands, but also in Europe, and I'm now speaking on behalf of AXA, would, first of all, very much appreciate to see it. And secondly, it would increase their likelihood enormously to end up in one of our portfolios. So we don't want to teach China a lesson. We just want to sort of share the common practices, introduce them to the IFC framework, and actually we really appreciate the initiatives that they're taking in respect of developing electrical cars, investing in cleaning the water, investing in cleaning the soil. We see those initiatives, and they're actually, we track the initiatives as well. So we want more conversation than anything else. And my sense is that with money you have leverage, and we try to sort of, right now, form a club of investors that is representing a meaningful pool to have a good conversation. So that's what's taking place right now.
Thank you, Hanneke. Now, I like the idea of pooling money and giving any company a reason to follow the SDGs and economic visions. And I believe the Chinese would typically understand that language. If you tell them you're making more money if you adapt your ways, and in fact you can do that, they would talk that language. But what I'm also, and I now want to go to the next point, China for the longest time was in discussions like these was saying, hey, we're a developing country, leave us alone, we want to pollute the world as you polluted the world and catch up. But now the catching up has been done. And now they don't say this anymore. Actually, now they are probably the biggest cleaner on the entire planet. So maybe one should also seek to find an index of valuing those companies that changed or are in the process of changing, of being the biggest polluters of the planet into becoming smaller polluters, because I think there's a big change going on in China. Because nowadays, if you are in Beijing and you talk about pollution, people might go on the street. And you know, if there's any source of disagreement in China, then it's the environmental pollution that nobody wants to face anymore. So and I think the leadership is very well aware of that, and they try to change that, but they cannot change it overnight.
Right. I have 3 answers to this.
Yeah.
Number 1, they right now are the winner of all the Olympic medals when it comes to pollution, so they still are. Number 2, they've announced indeed that they're planning to do something about it. And for an investor, that gives us comfort, because we know that when the Chinese government announces we're going to work on it, that something will really happen. Mm-hmm. And actually, we feel that what happened with Baidu, Tencent, in terms of Alibaba, the growth that they experienced over the last 10 years, so those companies basically had their growth path over the last 10 years. We actually expect that a similar growth path will take place for the companies that are going to operate in the areas where the pollution is going to be addressed. So we look at those companies because we feel that they're being supported by the government, and that is something positive. But next to that, we're going to try to exercise pressure. Reporting on the CO2 footprint, reporting on the contribution to the increase of temperature, and share with them what type of reporting we want before we invest in them.
No, I think you're on the right track, and I think you will be getting there. And if we can align economic success with, let's say, protection of the planet, if we can align those two things, I think we have come long ways. Yeah. And I think it's a goal that is very much worthy of trying to achieve. Yeah. So thank you, Hanneke. Big applause for her. Which leads me to our last panelist, our trusted friend, Seng Lo. Please, now I should say, give us your $500 worth of wisdom.
I'm not sure it's worth a few cents. Thanks, Loyens. Okay, perfect. I've been involved in China in three distinct guises. Before handover in Hong Kong and after handover, when this was a completely nascent market. I was head of origination, responsible for the whole of Asia, ex-Japan, but China was not even on the map. So I was in Indonesia more than, and the Philippines more than in China. The second phase was during the financial crisis. I was actually working with a government agency in China for about 2 years. And at that time, I got into the DNA of overseas strategic investment. This was really at the highest level. I would say that when I was there, Berlusconi made a call to this person I met and asked for money, by the way, for the Republic of Italy. And more recently, involved with a German family that is one of the biggest investors in China, but also the European Technology Chamber, which is headquartered in Brussels. It's an EU-driven initiative, but it's pan-European. Obviously very significant German interest, but also Italian and also French. I focus a lot on Italy right now, Lombardy, Brescia, and so on. So I actually get to see what exactly is going on. And we focus in this chamber as a technology chamber on 3 areas, which are part of the 2025 program. It's all enshrined in there. They are sustainable urbanization. We keep on emphasizing sustainable because technology has allowed us to create the circular economy. The second area is healthcare or life sciences. We use life sciences because that's a broader remit where Europe is also very strong. And the third area is Industry 4.0, obviously coming from Germany. But I tend to now use, I've shifted it to Economy 4.0, and I'm going to give a talk on Monday on Economy 4.0 because it's a much broader remit because technology has taken us beyond that. So what do we do as a chamber? We focus on technology because technology is going to drive a lot of the cross-border flows between China and Europe, and Huawei is just only a reflection of part of it. It's not the whole picture, and I can give you a bit more on that. So let's look at beyond the deal because we talk about numbers, we talk about statistics, and the first thing I want to say is that we fall into this trap of comparing David with Goliath because I met with the government of the provincial government of Shandong recently, and I just checked the GDP, and it's the same size as Canada. That's Shandong, by the way. It's not the biggest province in China, and it's the second, okay. And recently I had a whirlwind trip, just before we get into flows into China, covering Guangdong province. I went to west of Guangzhou, and then I went on to Ningbo in the Zhejiang province, and then finally Liaoning. And it's very interesting and very important to get where I met with the provincial government, but local government, and also the SOEs. I mean, that's what the European Technology Chamber does, because we feel that we need to address China at the top level. And I'm not talking of Beijing, I'm talking at provincial government level. We work with each of these provinces. They're all different. They're fighting amongst each other for attraction of inward investment, but they're also championing their own SOEs overseas. There's rivalry between the provinces, very intense, and also even within the province, between the SOEs. I mean, we don't see that, and that's why I say if you're doing M&A in China, you'll be falling into a trap. If you don't understand what's going on, due diligence is not financial in China. We're talking about non-fertile territory. Don't forget one important thing. There was no such thing as a privatized enterprise in China. Corporation law only came into being in, if memory serves me correct, in 1982, but the SOE liberalization did not begin until 1998. That's more or less what a milestone is, 98. That's when people started to see the liberalization. The West uses the word privatization of SOEs. Actually, not privatization, it's the corporatization of an SOE. That means you put in, for the first time, the governance structure with the shareholder stakes. Because the shareholder stakes, by the way, I did some checks. actually goes back to the Song dynasty, where the first joint stock company was actually established, believe it or not, even before the Venetian Empire. This was in the 12th century or something BC. So you will see that was actually not BC, that's going too far back. That's a Roman Empire, Greek and Roman. But we're already talking about the fact that there was collective interest in enterprises even in those days, but they were not corporatized until the Dutch came along with the East India Company. No, actually, with the Dutch. Yeah, VOC was the first. So, so the granularity is not there. There's no level playing field. And I think, and I'll go into the level playing field later because there's a lot of confusion also about renminbi offshore because different cities have different quotas. I was very surprised that Guangdong people, they were quite liberal with Guangdong. I mean, the policy is directed from the CCP and all these organs in Beijing. Don't get me wrong, that's where it's coming from. But when you get into the granularity of China, that's when it all matters. And you need also to understand where the skill base is. So you don't just go into to the textile industry in Liaoning province. You need to figure out where to go. And I'll just give you a snapshot of what's going on. One of the biggest robotics facilities in the world can be found in the Liaoning province because 3 out of 4 of the electric light vehicles that Renault runs, unfortunately has leadership issues right now, is in the Liaoning province near Shenyang, near Dalian. 3 out of 4. It's the most advanced. BMW has one of the largest plants in the world in Liaoning. 4 billion euro initial investment. They're already producing. It was completed 2 years, all on track, in time, robotics, everything. Okay, SAP's headquarters is in the Liaoning province. The largest service provider for the IT industry, powering Alibaba and so on, is in the Liaoning province. It's the Rust Belt. It's also the agricultural backyard. And we're trying to engender sustainable agriculture from Holland and so on into the Liaoning province. That's something I'm working on right now, the circular economy. So Holland's got a role to play getting into China. So the next thing I want to say is that there are natural barriers to getting into China. There's a whole raft of industries you cannot invest in. Don't think that if you're a software company, you can just go there and then start selling software through licenses. Not as straightforward as that. They're restricted industries, and I have to say China has done its bit, but not enough. It's lifted restrictions on nearly a third of these so-called sectors. But these are obviously sectors that have national benefits. These are, of course, in green tech and certain high-tech areas. But there's a whole raft of industries that you cannot invest in China. So you need to bear that in mind. Where are the opportunities? The opportunities is an incredible imbalance in China. 1/3, I mean, if you look at personal consumption, 1/3 of the GDP of China is represented by personal consumption, versus in the more developed world, 2/3 personal consumption, even more in America, even more in the UK, which is very much consumer-driven economy. So we're going to see this massive shift as people move into urban environments and everything changes into personal consumption. And as a personal consumption market, it is huge, it's enormous. I mean, it's a great country for selling widgets and so on. So I'd say that the structural shifts gives opportunities for overseas companies to get into China. So not just M&A, it's licensing, it's a whole range of things that will generate the revenues you want in China. So that's the inbound. I'm not going to talk about the outbound ones, but you will see that in China, the government has clamped down on a few areas, property. You look at Dalian Wanda in Hollywood, and they had to be, they were frozen out. The second sector would be, well, property and hotels. Sports, they've identified that that's an area. I actually tend to disagree with that because China is trying to create its next Winter Olympics champion. So you might see deals with ski companies, tour operators in this area and so on. But sports is one of the areas. And they've also clamped down on media So you're not going to see Hollywood mega deals taking place, at least under the government. It's a very strange, what do you call it, black and white heaven and hell situation, because in 2016, flows went crazy, and then the government decided to clamp down. And then, but within a 12-month period, they reversed it, and they allowed certain companies to go through. So the general restriction is this: if your deal is over 300 million US dollars, the equivalent, out of China, it has to be reported to and approved by the NDRC, which is the National Commission for Development, National Development and Reform Commission in Beijing, which is a very powerful organ, so it needs to approve that. Deals over 10 billion in certain sectors are okay. These are in mining, natural resources. These deals are strategic to China, and agriculture, by the way, that allows China to actually extend its asset base overseas. Don't think that Syngenta's deal was just to buy Syngenta. It's actually an added value onto the agricultural assets that are taking place. China already has a very well developed, very well defined industrial plan that is vertical, that's comprehensive. Don't think that these people in Beijing are just intellectuals, with pens and paper. They have mapped out everything. And I remember doing a survey on phosphate mines in Africa, in North Africa, Northwest Africa. And I called one of the Chinese agencies, and they said they already knew the entire terrain, the logistics, the cost of moving everything, etc., and the quality. It's all mapped by satellite. So the intel is second to none. Don't think you're dealing with a bunch of amateurs when you go into China. You're dealing with people who are very quiet and super smart. Now the next thing is, has the SOE, the state-owned enterprise, a hand in everything? Well, of course, the national statistics will tell you that 25% of the workforce of China is SOE, but I would say that the figure is probably more than that. And the SOEs are also extending their reach, because what used to be a Ministry of Petroleum is now Sinopec. So it's an SOE that's been morphed from, it's just as if SACC became some sovereign wealth fund, something of that nature. So I would say that when you deal with the granularity, you have to do your research, you have to get into the networking, and a lot of the trips are actually a waste of time, to be very frank. I've actually learned from doing this and getting on the ground that if you meet the right people, you interact with them at different levels, you get a sense of what's going on. And the fragmentation is quite distinct between, say, going from Ningbo to Hangzhou. That granularity is incredible. I've done Guangzhou and the different towns, and I find that, wow, even within that area, there are places that are fully focused on textiles. There's some that are doing microelectronics, because you need these skill sets to do these things. I mean, we keep on forgetting M&A is not about that. It's about people. Who's going to execute it? Who's your legal representative in China going to be? Who's going to manage the company chop? And just as an exaggeration, companies, subsidiaries have been sold before on the basis of a chop, because the chop in China is more important than the signature. The signature has no real basis in China. Don't bear in mind that. And even within the company, we have a WOFE, or wholly owned foreign enterprise. 3 guys hold the chop. I hold one. There's one person in Beijing holding one. And that's it. We are the only guys who can chop. And that's it. And so, I mean, with that, I just want to end my part of it.
Thank you, Seng. Round of applause quickly for him, otherwise I might forget. Now, you gave us a lot of your insight. Give me your advice to European governments. Do we need to push back?
A good question. I think in certain sectors, definitely. Because I was in China recently, and I saw the hunger for certain areas, and I also realized that some of these products have military applications, and I'm not into anything that promotes the arms race. I mean, indirectly they do. Mm-hmm. They're sensitive sectors. I think that in Switzerland that we should be very protective of. Schneider Aumann talked about that, but I think that we should think in terms like the British government having a mechanism in the sell downs I was involved in, having a golden share, so there's nothing to stop the Swiss government having one golden share in Swiss port or something. And because we're a totally liberal economy, but we should think about certain things that have an implication on national interests. And I can also, by the way, I was involved with CFIUS in 2009, 2010. So I'm very close to the US side of CFIUS, which is the Committee for Foreign Investment in the United States. You can see some of my thoughts in white and case, I think, before.
Saying you're a very good person to ask the next question.
Oh.
What is the Swiss national interest? We all have to be blonde and blue-eyed?
Sorry, what is our national interest?
How do you define the Swiss national interest?
Actually, I have to be very, very careful here because I'm actually British and someone's called me the accidental Swiss. But I think because we're a small landlocked country, and this is where I think we should never lump ourselves in this respect with the whole of Europe. This is really important. I mean, certain things I believe we have to go in a collective force, right? But in certain things we're completely different from the rest of Europe, and we need to preserve this character somehow. And this is where some, you could call it some strange extraterritorial nationalism comes in. I think that the borders of Switzerland are really very important, and I think digital infrastructure is very important. I think that I'm glad, so on the crypto side, I think we have to be very, very careful that the cybersecurity measures, and I'm going to be working on this because this is very important. The government has said that, so cybersecurity is where I think is one of the most important areas of our involvement. And one final point was, everyone forgets this, in a 2025 program, and maybe some researchers can help me, I'm also on the panel of the World Chinese Economic Forum. China in the 2025 program has identified 3 clusters, geographic clusters of strategic importance, geographic. Forget the US right for now. It's Greater Milan, which actually means Lombardy, Brescia, Veneto, and so on, one of the biggest powers. Greater Munich, which I would include Baden-Württemberg as well. And the third cluster, which is a country, is Switzerland. And we have indirectly contributed to One Belt, One Road by building the Gotthard Basis Tunnel, because it means that the train from Chongqing, which also is connected, goes to Duisburg, and it can go straight into Milan, feeds in the whole infrastructure. So we need to protect the integrity of the physical assets that we have in this whole construct. Sorry.
And this despite the fact that the train doesn't run on water. No, just a silly comment. Now, I noted from your comments that it is not so easy to define what is the Swiss national interest, and in fact, it is not so easy. But you led over to the next topic that I just want to throw into the panel before I open up the floor. Cybersecurity. And I think when you talk about cybersecurity, immediately the gentleman over there comes into mind who said, hey, talk a little bit about the Huawei case. What is your idea, or what does the panel think about cybersecurity, and what is happening out there in the world when all of a sudden Australia doesn't do anything with Huawei anymore and might not be able to build up a 5G network? Any comments from the panel?
My first comment is that I already saw this Huawei situation arising because Jacinda, of the Prime Minister of New Zealand, was the first in the West to block the deal. And many feel that the US had its long hand or long arm in this. And at that time, Britain came up with a statement, look, Huawei can come in here, but they reversed that. The biggest block there you could see was the Broadcom, Qualcomm acquisition or potential acquisition, which would have been 117 billion. Broadcom, by the way, is a Singapore-based company, but with Asian interests, and that was blocked directly by Trump and his team. And you could see that there's a big battle going on right now in the infrastructure engineering situation for 5G. And the situation is very simple. If the whole infrastructure were controlled by Huawei, I think you are actually going to be running the risk not only of the initial investment, but also there are other issues when it comes to network engineering. By the way, I used to be in the mobile telecommunications business, so I could add a bit more onto it later on. But it is really something that was going to happen anyway.
Okay, on to Marco.
Yeah, right. I mean, it's like you said, this case really emphasizes where the main interest currently is. It's on cybersecurity. If you control the network, if you control the data, you control the world. And that's what we are currently seeing all around happening. It is not only on a governmental level, also on a normal enterprise level. You realize what actually you have with the data and who is controlling that will eventually in 5 to 10 years rule the world. So the case is really exemplifies what is currently going on in the world in a sense. US and Canada, they are trying to make their stake, they are trying to make it clear. We will see what is happening with that. I mean, everybody is now alarmed. Everybody is aware of the threat that cybersecurity poses and of the threat that is inherent in the network control, actually.
What did we do when we heard from Edward Snowden? Anyone, any reply from the panel? No, okay. Maybe it is a difficult question. But I think I'm a little bit cynical about this. I think everybody listens into, whether it's Chinese or American, I don't really care. And I'm not important enough. And the Chinese might not even understand Swiss German. So I have a chance that they won't understand me. But anyway, with this, I want to open the floor to the audience. Are there any questions in the audience that my learned panelists could deal with? Yes, Sir Bolzano?
Are we concentrating on China because that's the theme? Or is it that only China matters? I mean, does the West care if somebody else is coming in? Do they have, I mean, do they say there are certain things that we will not allow foreigners to buy, or is it only Chinese?
It's a good question. I mean,
my quick answer, I think currently it's definitely just dealing with China, which is the looming giant in the background. And I'm not afraid of them, but the other big giant seems to be afraid of them. And I think that's probably the answer, or that's my answer. But there might be different answers from my panelists.
I see it the same way. It's clear from where the regulations are driven from. It's the fear of China. Of course, you try to stipulate it in a way that it's on a general level, but who has the power to actually do that, to acquire these assets strategically? There is only one player in the world.
that's right. I mean, this is a very interesting test case because, I mean, who's going to actually provide the rollout of the 5G networks? It's going to fall in Europe to Nokia, what's left of Nokia's engineering division. But also Ericsson's, which is, by the way, a very big player in the world. But none of these companies have the critical mass and the financial backing for rolling out standards globally. So I think the net result at the end of the day, which I think might happen, unfortunately, is that we're going to have fragmented networks because the US, for security reasons, are going to create and people will disagree with me on this one, but I will tell you that they will have their own 5G network, which will be different from the Europeans. So if the Europeans don't get together and have a common standard, don't expect France or Britain on its own to go and launch a network that the whole of Europe will embrace. I mean, there's no critical mass of subscribers, there's no common standards. The EU can do that for sure if it gets together, and I'm hoping that the EU will come together in this area and push its weight.
I only see hands going up to cover the mouth. Oh, Barbara, you have a question? Oh.
Yes, why not?
That would be welcome. Well, I'm not going to force questions on you. Yes, Professor Ziltner.
Thank you, Mr. Tak. That was really interesting what you have said, that the Chinese have in the context, I repeat it because I'm not sure if I understand correctly, the Chinese have in the context of the 2025 program identified 3 crucial clusters, one of them being Switzerland. Did I understand that correctly?
Correct, that was
say
quoted.
a little bit more about this? This is very interesting.
Yeah, okay, I will tell you where it comes from. I'm involved, I'm an advisor to what's called the World Chinese Economic Forum. It's actually a forum actually driven out of different centers out of Asia and also Beijing. And this report or quote came from one of the studies, and I've been trying to track what exactly, where exactly, because I want to look at the source, and I actually would not be surprised, because if you take this region, which I've mentioned, and don't forget China's biggest trading partner is the EU, and within that is Germany and so on, but if you look carefully at the statistics, but also the fabric of all the industries in this geographic cluster, you will find that this actually accounts for most of the GDP of the EU. So, they must have mapped all of this out when they drew out all the nodes and so on, because that's at the end of the day, that's where they want the ultimate connectivity to these centers, where you also have very, very strong R&D, TUM, where we have ETH just next door, but okay, not forgetting the University of Zurich. But I'm still trying to, by the way, locate exactly which part of the study it came from. But these are 3 sectors or three regions that were highlighted, or clusters.
Thank you. I have a question for Mr. Seng. Already Bill Fisher in the morning, he mentioned that there might be 2 World Wide Web in the future, and you mentioned the different networks that would eventually develop. How can I imagine this? I mean, how do they interconnect? What would this mean for us? Are there any threats? Would all the opportunities and advantages of the World Wide Web that we now have get lost? And I mean, that's a pretty hard future that you see.
It's a very, very good question. I was giving a speech in China in 3 centers, and I said that one of the most incredible spin-offs from Switzerland, from CERN, actually is Professor Tim, Sir today, Tim Berners, is the World Wide Web. I mean, probably be the most valuable tech company in the world, but he gave it to the world. I mean, the question is what's the next version of WWW2 going to be like, and who's going to be the final, if you like, blender of the next generation of because we're running out of capacity. Everyone thinks this is unlimited, but it is limited. So my question is, who's actually going to be setting the standards? And in the past, I would say that everything very much was U.S.-centric, to be frank. This is the real issue here. We've moved from You use the word mutual suspicion. I would say mutual ransom is the word I'm going to use. Mutual ransom between two powers. I mean, in the past, my familiarities with Japan originally more than China, because I was a board member of one of the largest Japanese financial institutions. And in the past, Japan was nowhere near this role, so there was no real threat. Now we have, I would say, not two equals, but America seems to say that there is a very big rival. So we see this superpower play in all aspects. And I'm, my question, of course, which is what we're all trying to figure out, is where does Europe stand in all of this?
Just a quick comment. You're so young that you might not remember there used to be two mobile phone standards. If you went to America, you had to have a dual receiver. And if you went to Korea, and their GSM standard prevailed. Lucky us.
Yeah, I mean, for me being born in 1993, someone saying that there might be several worldwide webs, that's like...
It's unbelievable. We grew up without the web. Yes,
yeah,
please.
just leading on from what your last words there about where does Europe stand, it was a remarkably telepathic thing where I was thinking the same. So I've come to this conference profoundly interested in China, and I've ended up at the end of the day reflecting on Europe. And it's a funny sort of journey I've taken, because the wealth and potential of Europe is massive when you put it together. It's bigger than America, it's bigger than China.
Yeah, absolutely.
But we seem to be playing second ball. We seem to be, catching up. I'm not quite sure, but I'm sort of left as a European a bit bereft of a strategy, of a way of dealing which will be effectively independent and effectively prosperous for Europe in the long term. Yeah. Where does Europe stand?
Good question. I mean, Europe is the EU is the world's largest trading bloc, and even without the UK in the EU, it's still the world's largest trading bloc, and China's trade with the EU exceeded China's trade, bilateral by the way, with the US quite a number of years ago. I can't remember when the flip over happened. So as a bloc, it's the largest. What I feel that Brexit has done is it's moved us away from thinking of how powerful the bloc is as a whole. It is a very powerful bloc. And one of the things about the European Technology Chamber is, although there are Germans behind it, we said that, well, actually, if Germans just went to China, they would just brush Germany aside. I mean, I'm just exaggerating one country, but as an EU bloc, so that's why the chamber is now pan-European, because we feel that to deal with China, we need to talk about a pan-European approach as opposed to whether it be Italy or France or the UK. I think that it's a different basis of relationship altogether in dealing with China. I mean, we might as well just deal with the province of Guangdong, and that's about it. Different thing, dynamic altogether. But Europe is a great creator of ideas. I mean, look at Linux. Everything you have. Linus Torvald, he's a terrible guy because he said he relates better to computers than to human beings. I just thought, gosh, that's horrible. He's already become a robot. So that we're we're great at creating things that are, and don't forget CERN. CERN, I don't know whose money is going to pour in. 10 or 20 billion is going to the upgrade of CERN. We're going to build a Hadron Collider 10 times more powerful than the one we have now. Don't ask me what it's going to do, but China just announced that in Shanghai, it'll do one that's going to beat that as well. So we'll see.
Yeah, I would be interested Mr. Tak, to have your view on the following issue. I mean, I come back to the discussion whether the concern relating to these acquisitions is rather China or foreign or whatsoever. In my feeling, the concern often is not so much that one, but whether it's a government-owned company or a privately owned company. So do you see any perspective of diversification, internationalization of the ownership, shareholder base of these huge Chinese companies? I mean, this might solve part of the concern issue.
You know, the large companies, and I met two in Guangdong recently. They're amongst the largest. They're privatizing parts of their business. That's very good. I met some very entrepreneurial, but there's always the invisible hand of either the local municipality, it's a very powerful one and a large one. So if you're dealing with Shanghai, you know, the municipal government is already very powerful. Then you have the provincial government as well. And meeting with some of these provincial governors, I was told that some of them could be the next Xi Jinping. And don't forget, Bo Jilai was a Liaoning province governor as well. So before I moved on to Chongqing, so you know you cannot escape. So this is a very good question. We're seeing more and more entrepreneurs and privatized companies coming in, and that's good. I mean, I like to see more of these. But so far, many of them have. I mean, the real estate ones, I have to say, they grew on. You know, they yes, they have friends within in Beijing, but they are you know they've been doing all the acquisitions pretty much based on their own free will. I mean, there was no direction, and the interaction was pretty good. I can't comment on HNA. You know that there's serious financial issues behind that. But they were. I mean, going back, are they privatized? Are they private on how they run? I cannot answer what would be behind such a group, because for a group coming from Hainan to have a stake in Deutsche Bank, to buy all the arrows, you know, the Swiss port and what else did they buy? Gate Gourmet. And the logistics company in one go, well, within a short period of time, is really quite mind-boggling. Of course, funded by debt, but who provides the debt for these acquisitions? And if you really look at the debt providers, it's the CCP itself. Ultimately, right, the Chinese, it's coming straight from Beijing. So the question is a very interesting one. But I think, having said that, I think as you move towards market principles, you have to really reduce that involvement, because that's not the dynamic of free markets anyway.
I just want to give a very quick comment in replying to my colleague from Netherlands about the role of the Europe in this map. I'm still very positive about the role of Europe, because from Chinese perspective, US is not anymore as a target to learn from, and Europe still is. So there are a lot of space for Chinese companies, also the government level, to learn from. We can see from the recent years that the door is more open to the European delegates, and more people coming to Europe to study in the education sector. But there is one thing I believe European firms, European associations like Chamber of Commerce and European University need to learn from Chinese, which is that in China, the university plays a role that helps the industry to self-critique, to self-observe their questions, their problems. But here, we're too much into the basic research, and applied research is just a leave behind. So the companies just play their role alone, or they ask for independent advisor for the advice, but they are not a collective, a group to see the phenomenal issues. I think from that point, the European university education need to learn more of this national innovation system where China already played a role there in their development.
I think the lady in the back.
I want to go from the big picture to maybe more concrete action. So just if I may generalize, I think now the world is a bit from the superpower American side, more closed and seeking for economy isolation, to the European side. I see some disharmonized internally, and wait and see, and then and on the China side, rather, as always, from the thousands of years, being embracing, being open to be connected. So especially with the One Belt, One Road, as China is financing this open approach, how do you foresee the future, the biggest general trend, this three mega trends, if I say? Then also, what does it mean in the concrete daily business for companies? How should they act? Should they be more conservative, wait and see, or take the risk, or take what kind of actions or advice you can give to them?
Anyone in my panel would like to respond to this? Yes, please.
So I can be short and then I'll hand over. So when I'm here, I'm talking on behalf of SACC. And we were actually really happy to see that we were able to acquire the full ownership of a Chinese insurance company. So for a long time, there are discussions taking place in terms of reciprocity, and can a foreigner really become an owner of a company in China? And so recently, we have obtained the ownership, the full ownership of an insurance company in China, and we actually paid for it as well. So we took that risk, and we view China as a market with a lot of potential. So from the economic point of view, there are, I think, three trends in China that we appreciate, which is that the middle class is growing, and that leads to an increased focus on health, an increased focus on wealth. So what do you do with the money that you accumulate? And actually also an increased focus on pleasure. We're not in that business, but we're in the health and the wealth business, and we have sort of the company has the conviction to move forward. That having said, I hope that my sense is I'm not a China expert, so I look at it from a real distance, and in this distance, it's my intuition that there's a contract between the party and the people, and that the contract is we give you a better life if you let us run it. And so I truly hope that the economy in China is going to be stable and to continue on its growth path, because my sense is that that contract, that social contract, if it's there, it's my intuition, I'm not a Chinese expert, but it's super important to China. The European perspective is that I really liked your comment in terms of how should I look at Europe. My sense is that we always in Europe look at China from our own country, but if you would sum up all the countries in Europe, we're actually a superpower as well. We just don't have a high profile in terms of somebody who's loud in the press or lots of army activities on behalf of Europe, which in a way I think is quite nice. So there was this saying of Deng Xiaoping, I think, which is like, you make yourself bigger, but you do it in silence. And in a way, our organization sort of creates that we almost naturally put this strategy in place, that we work on our economy and we do it more or less in silence. Not with a big army and not with a large leader. But back to the G5 discussion. It's weird that America has a G5 technology, China has a G5 technology, and Europe doesn't have it. So as a company, in terms of now back to your question, what should you do as a company? Well, if you don't take risks, you're not making money. So you have to think about your risk budget. What is really the risk budget? What is the money? What is the money in the wallet that you are willing to lose? Can you accept the consequences if you lose it? But you have to take risks. And then back to China. With the Chinese government, they're actually pretty explicit about where they want to go. And I think that helps in taking risks in China. So as if representing a European insurance company, the company took a risk in China. Yeah.
Thank you.
Yeah.
And I think with this, I conclude this panel. After I ask you to give them their well-deserved applause, you still have to bear with me. So please, you will still have to listen to me. Don't walk away. Give them a big hand of applause. Now I really stand between you and the weekend. And so you can start boo and walk away anytime, and I will shut up then. But I quickly want to wrap up this first annual event, and you heard the annual. We want to do this again. Next time we want to have all the seats filled and more. This time I think we are happy that we streamed it. So we are happy that we have an audience out there, hi there, because the people that are in here are not very breathtaking. But you saw that the panelists, they know what they're doing. You saw that we have things to take home with. If I quickly wrap up from the first panel, we learned from Professor Ziltner that numbers do matter. And numbers often shed a light into the mumbo-jumbo that we just think we hear, and that is maybe now called fake news or whatever news, and that our mind has to deal with all the time. If you get numbers, you create clarity. And I'm very grateful that you work on that clarity. And what my takeaway from these numbers is that you get more precise numbers in China than you get from the Swiss Statistical Authority. Big surprise to me, because, you know, I heard Hanneke as well. She says some of the numbers that we get from there are not really the best. I learned, of course, that 50% of the exports to China are gold, which I did not know, which is shockingly surprising. But we learned that. And I know from previous things that Switzerland refuses to put gold exports and imports into their trade statistics. I don't know whether they have changed that, but they used to refuse to do that because they didn't want anybody to know what the national reserves would be in gold. Or that was the origination of that. But anyway, now we know 50% of our gold goes to China. What I learned as well in the first panel is that the GDP growth index is also the self-killing index. And to a certain extent, there's something behind that. If you measure well-being just by the growth of your GDP, you might go down a dead-end road. You might have to measure accomplishment. You might have to measure future and your future with other indexes. And if you just rely on GDP growth, you might really end up somewhere where you don't want to end up, in a dirty pond where no fish can live. In the second, and then one of the most important things, and this is something that really made me think, was the issue that came from the audience. Is our big engine that I call, and when I say our big engine, then I relate to the Western world. The big engine of the Western world used to be capitalism and democracy. Is that big engine starting to sputter, and is it about to fail? Do we need to reinvent this engine? Do we need to look at it from a different angle? Do we need to find a new formula? Big thoughts. Second panel, I will not forget the brand tree from our friend Florin. Good visualization of what's going on when you deal with brands. I learned that economic nationalism is a lose-lose. And of course, we all want to go for win-wins. I heard from our freedom fighter, Sir Bolzano, that experts don't always get it right, because when they look into the future, they predict usually the wrong thing. He called it that we're in the middle of a political climate change. I think that's very true. And how does that climate go to? I hope we will have warm clothes from China, those textiles from China that we might need if it gets cold, or nice swimwear from America if it's all going to be a beach party. From Dr. Pilny, my friend, I heard the problem, and this I think is a very good sentence, the problem is not that China has a plan, for example, that China has a plan to build the Belt and Road, but the problem is that the rest of us, we do not have a plan. We just sit here and wait and see what's happening. There used to be days when Europe had a plan when we built the Suez Canal. Now, try to do something like that. We'd rather Brexit, and we're busy with that than do anything else. Another big thing from Florin that I learned is teaching is listening. So we all have to learn how to listen. And we have to learn also to listen to people that might not communicate the way we do or the way we are used to. Listening, maybe this will be the thing of the future. From the next panel, I learned that if you want to get rich, you have to be on the road first. Very good one. Because when you're on the road first, you have to get up in the morning, you have to do something. And I guess that's what you go to if you want to build some infrastructure to get where. I learned that BRI could be considered a tool, like a hammer. And it's just a question on how this tool is being used. The tool can, I think Pino said, break your head, but it can also help you to achieve another goal, to hammer in a nail. I was surprised actually to hear today from an Italian a quote of Voltaire, because you may have heard that the French have just withdrawn their ambassador from Italy, because of some nationalistic spat between the two countries. Funny things happening. We learned that you can exchange money or you can transfer money from Europe or China to Ghana, of all the places to Ghana, within 15 minutes, because ICBC showed them how to do it. Here we need at least 3 days, because the bank wants to keep it, to calculate some interest, or that's just our achievements. What didn't really go down well with me was that I learned that Europe does what the Americans tell us to do. I really don't like that. I like to think that I do what I want to do. But I guess that came from a learned colleague, so I have to take it for granted. In our last panel, the amazing thing is that transactions in Switzerland have doubled in the last year, which I did not know, which for me was quite a new one. We learned about the impact of the environment, about the SDGs, and about the Global Compact, and how we could use some of our resources as an instrument to convince others to do the same as we are trying to do, trying to protect our environment and the planet on which our children, hopefully, will live happily into the future. I learned from Seng that it is almost impossible to really clearly define a national interest. What is a national interest? I think if we find out what that is, I think we will all be wise. I want to close this discussion with a very big thought and then a very big thank you for all of you being here. But the big thought is, do we really need nations? Because if we don't have them, we don't need to talk about power. And we can just move forward and live peacefully with one another. And I think the world currently says we do need nations, but I hope we will reach a point where we won't need them anymore. Thank you everyone for attending, and a big thanks to Ying, the organizer, and Ali up there. He did an incredible job. And Barbara, here, our trusted secretary. Thanks, and give them all a big hand. Now the weekend is here.
Super. Yeah. I'm gonna run off to the restroom, actually. Yeah.